All right, so you all know Reid Clark. He is with Silverton Mortgage. They are one of our preferred lenders in our office.
That's the red on my shirt.
That's right. And we appreciate his flexibility and always willing to help us out. So he's here to help us be experts at reading settlement statements and understanding them so we can talk smart to our clients. So Reid, I'll let you just take it away.
Well, thank you very much. A little bit about the evolution, and Nita mentioned this, kind of alluded to it a minute ago, that there have been changes over the last few years, changes in the documentation and a few changes as to who pays what. So what I want to do is to show you kind of sequentially the documents that are pertinent in the mortgage transaction. And we're going to start with a loan estimate, which is what the client gets, at the point of the loan application. We send that out to the client. It has all our numbers on it. And then how that translates over to a preliminary closing disclosure, which the client has to get at least 3 days prior to closing. And God willing, it reflects virtually the same numbers as the loan estimate. We try very hard to make the loan estimate accurate because I don't want to have to, some of it's self-preservation. I just don't want to have to explain the differences when they get the closing disclosure. So we try super hard to have the client, if there are going to be any differences, that they're to the client's favor, and it's actually a beneficial difference at the end. But then also at the end on the closing disclosure, that's not a document that you're going to typically see. By law, for us to share that with the realtor, we have to have written permission from the client. And every once in a while we do get that. But most of the time you're going to be getting an ALTA settlement statement. And ALTA stands for the American Land Title Association. That form looks like the old HUD-1 settlement. Well, it looks a little bit more like the old HUD-1 settlement statement that I know Julianne is familiar with, and maybe an Yvette too, probably, who's on the call. Life used to be a little bit easier in regard to this documentation. There was one document that we dealt with, and it was a HUD-1 settlement statement. Very linear. Buyer's information on one side, buyer's numbers on one side, seller's numbers on the other side, and they came together at the bottom and netted out. That's what your ALTA settlement statement looks like, and that's what you will typically be able to review prior to closing. That comes from the attorney, and they're going to give it to you. The reason that the government imposed this difference is because they felt like that there was personal information on the closing disclosure that one of the parties may not want the other party to see. So that's why there's a closing disclosure. So I'm going to try to share my screen, and I'm going to start out with a loan estimate. And this is actually a loan of Libby's that is closing tomorrow, I believe. Let's see when it's closing. On the 1st. So let's see if I can do this. So I'm going to try to share screen, and I'm going to try to share. Let's do this. Let's do this one. All right. So what can you guys see now? Somebody chime in. Do you see the, thanks, Julianne. Do you see the loan estimate?
Yes, I do.
Okay.
Sorry about that.
That's okay. That's all right. I wasn't sure if I did it right. So as you see on the loan estimate, it has all the information from the lender at the top. It has the client's information. Can you see my cursor?
Uh-huh.
Okay. Has all the information about the property, the purchase price, everything like that. That's the applicant's name and their address. And this is the date on which it was issued. This document has to be issued to the client 3 days, within 3 days of us having a loan application. So this is what the client will get, and this is where they're going to be able to see their numbers. If this is important right here, this is the initial loan estimate. So we sent this loan estimate out to the client before the interest rate was locked. He wanted to, I think the market was improving at that time, and he wanted to wait. We would have sent out another one of these once the interest rate was locked, called a redisclosure. It looks just like this, but it would have said that the interest rate was locked right here. And it would have said right in this area how long the interest rate was locked for. So you have the pertinent info would be the sales price here and the loan amount. So the client's going to get this, they're going to review it, say, yes, that's the amount that I wanted to borrow. Their interest rate, in this case, it was not locked. He actually locked lower than that. His monthly principal and interest payment. This obviously, can this amount increase after closing? No. Prepayment penalty, no. There's almost no loans that have prepayment penalties these days. Very, very rare. It would be some oddball type of loan. Then the balloon payment, and it doesn't have a balloon payment. And then in the next section, it breaks down the projected payment. Now, this is something your client's going to get, and there may be a point at which your client forwards this to you and asks you to help them understand it. Hopefully, they'll just ask us, but you need to know enough about it to be able to speak intelligently about it. Principal and interest, and as you can see, the principal and interest never will change because the amount borrowed and the interest rate never change. But PMI, it starts out on this loan at $156 a month, but it's going to go away. And from years 10 through 30, he'll have no PMI. And then we've got the estimated escrow. That's taxes and insurance in this case. And that's his payment. Now, obviously, we know, and we try to tell the clients that your taxes and insurance are very likely going to change during the course of your loan. But the principal and interest part of your payment never will. So they know what the monthly payment's going to be.
So we assume this is a conventional loan then, right?
This one is a 3% down conventional.
It has to be because
right, PMI goes away.
PMI goes away, right? Right.
The other thing, actually, though, if it had been, and you know from the top numbers with the amount borrowed here that it's not, you could have a FHA loan where they were putting 10% down. If you did, it would have said years 1 through 11 right here, and then years 12 through 30, because after 10 years on an FHA loan, the PMI will go away if they put 10% down. So here we have the breakdown of the escrow amounts. And if you notice, this amount here, $556, is higher than this. That's because this client has, what, $29 a month HOA dues. That's not included in escrow, but it is part of his monthly housing obligation. Estimated closing costs. Now, these are the numbers that are going to carry from the next page that I'm going to show you. And this is the amount of cash due at closing. Frankly, in my mind, the things that are most important for a client to know is how much is my monthly payment going to be? What's my interest rate? And how much money am I bringing to the table? I mean, really, everything else is kind of noise. But we give them the detail. But those are the main numbers. Like when I'm reviewing one of these things, those are the 3 high points that I want to look at, because if those numbers, like especially this number, if this number is correct, that means that everything that makes up that number is correct. So then we're going to go to the next page. Now, this is all the detail.
Can I ask you a question, Reid?
You sure can.
On that first page, it said closing costs, but then at the bottom it said estimated cash to close, including closing costs. So does that mean that we were asking for closing costs?
In this case, let's see. Not necessarily, because estimated cash due at closing would have taken into account their earnest money also.
Okay, but does it take into account any, so estimated closing costs, does that include their down payment or not?
Estimated closing cost does not include their down payment. That's the total of all the costs and prepaids on the loan.
So this estimated cash to close is just for closing costs, not the down payment as well.
Mm-hmm. Estimated cash to close is everything. Estimated cash to close is everything. I'm going to show you that breakdown in a second.
Okay.
So you're thinking about it like an accounting worksheet, which would make sense, where you start at the bottom and you go to the top and come up with a sum. These two, that's actually a very good question, because I have had at the 11th hour to explain this too many times. The estimated closing cost is just, if you look at it, it's the cost of the loan. 7151, that's his escrows, prepaids. and 0 in lender credits on this one. He actually did end up with 1 when we locked the rate. But this is the amount of money that he's going to come to the closing table with. And when I'm talking to a client, I want to always give them absolute numbers. And what I mean by that is, I don't want to give him your down payment is this and your closing costs are this. And then he has to try to synthesize those two and figure out how much money he's coming to the closing table with. I want to tell him, when you wire money to the attorney for your closing, in this case, it's going to be very close to $8,300, because I don't want him guessing. I don't want him to have to guess as to how much money I'm going to have to show up with on closing day. In this case now, this is the only lender fees. Silverton charges one flat fee to simplify things rather than charging an underwriting and processing and credit report and doc prep and flood cert and all that stuff. We just lumped it all together and charged this. And it's about what everybody else does. I think every time I've compared with somebody, it's very close, or sometimes a little less, sometimes a little higher. Cost of the appraisal is here. And again, these are the numbers that made up that $10,855. You see over here on the right side, $10,855. That's that number that showed up on page 1 right here. So that's all the cost of the loan. Now, here is where we derive the amount cash due at closing. In this case, Miss Libby Bailey did a mighty good job negotiating closing costs for a client. So the seller's paying most of the closing costs for the client. Here in this section, these are the attorney's fees. By law, it is services you could shop for. However, there was a trump card that's already been played in your scenario because your contract says who the attorney's going to be, right? So even though your client technically does have the right to negotiate the settlement services, once it's in the contract, I guess you have to go back and amend if you're changing attorneys. But so that's part of the negotiation. These fees.
So the estimated cash to close is truly everything. Down payment, closing costs, everything. Okay.
Yep. Absolutely. These are accurate fees. We actually, before we disclose to the client, we actually call the various attorneys and make sure that we have accurate fees for this transaction so that we don't get any of those surprises at the end. Over on the right side, this is your escrow section. So, well, except for the top, you got transfer taxes. Transfer taxes includes two things. Now, Nita asked a question a while ago that told me that she may have seen some of these, has dealt with settlement statements in the past, because about, Julianne, you can tell me, maybe 8 years ago, it used to be that the buyer paid the transfer taxes. And it changed, I don't know, 8 or 10 years ago to where the seller pays the transfer taxes. It's been a long time.
I don't remember.
It's been a while, yeah. So that number right there, transfer taxes, includes two things. It includes the actual transfer tax, which is $1 per thousand of the purchase price. And it includes the intangibles tax, which goes to the state of Georgia. It's $3 per thousand of the loan amount. And they're lumped together in that category right there. Now, in this case, we're estimating that the client's annual homeowner's insurance will be about $1,500. That's going to be collected and paid at closing. So he's going to be covered for the whole first year of homeowner's insurance as soon as he walks away from the table, because that money's being collected as part of his closing costs. This person is closing on the first day of the month. So there's going to be interest collected for the entire month. So he's going to close on July 1st. His first payment won't be due until September 1st. But we have to collect the interest for July at closing, because the interest for August will be included in his September 1 payment. So this number varies right here based on the day of the month that the loan is closing. Also, if you think about it this way, so he's closing July 1st, his first payment won't be due till September 1st. He's not going to have made 12 payments by the time the homeowner's insurance has got to be paid again. he's going to make maybe 10 payments, and then we're going to have to pay his insurance again. That's why we front load the escrow account with a couple of months to cover, so that there'll be enough money in the account next year to pay the bill. Now, this part right here, this is kind of an experience thing. We're estimating that we're going to collect, this is the monthly taxes on the property, and we're going to collect about 5 months worth. Now, this is in Cobb County, so the bill is due in October. Well, 5 months isn't going to pay it, right? 5 months isn't going to be enough to have in his account. But the seller owned that house from January 1st to July 1st. So you're going to have a credit coming from the seller, and I'll show you that in a minute on the closing disclosure right here. So HOA dues, that's his initiation fee. Title insurance, this is owner's title insurance, which is optional. And I get asked about that a fair amount. So I generally push that back to the realtor and the attorney. So I would suggest you guys to have a script about owner's title insurance, so you'll know, obviously you're not going to force them to get it, but you need to know how to advise them and sound knowledgeable about it. Or you could just say, talk to the attorney, but you probably can do a little better than that. And all those numbers are netted out here. There's his earnest money of $3,400, closing costs, seller contributions, and it nets out to this amount here. So that is a loan estimate. That is the formal document that your client gets. He can get it either when he's shopping for a loan, or he can get it, he will get it within 3 business days of actually us having a full application, which includes the property address. Does anybody have a question on that?
I do. Reid, exactly which groups of those numbers add up to like the total seller contribution that we can ask for, or that we would ask for?
Everything in here. It's only, the only limitation is on the loan program. So in this case, this guy's loan program, he was limited to 3% of the purchase price. And so his realtor couldn't have asked for any more than that. I can give you a little rundown of those limitations if you want.
So
you
mean
FHA,
like for FHA at 6%, that kind of thing?
Yeah, VA typically is capped at 4. VA's guidelines are a little bit weird. They don't specifically spell it out, but in general, we say 4%. On a conventional loan, it's limited to 3% unless the client puts down at least a 10% down payment. Then it goes to 6%. If they put 25% down on the house, it can go up to 9%. I've had that one time where they asked for 9%.
And then I'm sorry, go ahead.
Go ahead, Julie.
No, you go, Yvette, and then I'll go.
Okay, so Reid, what you're saying is in this scenario, they could have asked for a total of $10,855,000 in closing costs.
Let's do a little math.
Up to your 6%, I guess.
It would have been 345 times 3. Is that it? Is that what that is?
345 times 3.
Yeah, 10,350 is what that is. Is that what
Yeah,
she got?
10,000. Yeah.
So she could have got, she had another $850 she could have pinched them for. But then, you do run into the situation of having more contribution than you do cost. And at that point, you just, you could throw in a home warranty, or you can buy the rate down a little bit, because we're not going to leave the seller's money on the table.
Okay.
So my question, Reid, was, and this is more on the front end, but I think it's something that we all need to remember. Conventional, there's no requirements for any seller pays. But on an FHA and a VA, there are. Can you give us a rule of thumb of what to ask for in closing costs, or what we need to prepare for that the seller has to pay for?
VA does, FHA doesn't. You can have no seller pays on a VA loan. And with Silverton, here's the thing about that. And Julianne's bringing up a good question, because in certain circumstances, you can get in trouble on that right at the very end. like, for example, let's say you had a VA loan and there's no seller contribution to closing costs. Silverton views it a little bit differently. We, I don't even know how to explain exactly how we've done it, except that we view that there really doesn't have to be any in the contract. What Julianne is saying is there's a guideline in VA loans that says that the veteran cannot pay these fees, and it's tricky, it's difficult. If you're writing a VA contract, let me just say it this way. If you're writing a VA contract, it'd be really good to have a couple $1,000s of seller contributions, because depending on who the lender is, they may actually look at that in your contract. We don't, because we view that those costs are being covered by us out of the interest rate and that type of thing. But I would suggest on a VA loan, you always ask for at least a couple thousand of seller contributions. And that's what Julianne's getting at. And that's you don't learn that one until you get burned once or twice. Have you ever been burned by it, Julianne?
Yes, I have.
Okay. I wish I could make this more entertaining for you guys, like maybe a little song and dance or something.
No, it's good. So, and one thing to talk about maybe very briefly is, you mentioned the interest that's listed. The value of closing towards the end of the month versus at the beginning of the month.
That would be right here. Like if you've got a client who's maybe got to pay another month's rent and they're tight on cash, this is a great point. If they close toward the end of the month, this number right here, 31 days of interest that's being collected at closing. If he was closing on the 25th, he'd have 5 or 6 days of interest here, and his cash due at closing would be that much less. So if your client's tight on cash, closing at the end of the month really makes a difference. They're either going to pay rent where they are, or interest on their own loan, or interest on the new loan, one or the other, but it really does come down to what their cash situation is. And this one is max cash due at closing, because he's closing on the 1st. So I'm going to flip over to the closing disclosure, and this is the one that your client has to get at least 3 business days prior to closing. This is one that if you don't know the lender, you probably want to check with them starting about 5 days out from closing and ask them, when is the closing disclosure going to be sent? Hey, it looks to me, by my calculation, the closing disclosure needs to go out by, say, Thursday. Are we on track for that? So this one, he's closing on the 1st. So let me look at my little calendar here. He can't be closing on the 1st. Can he be closing on? Oh wait, I'm on the wrong month. There we go. So he's closing on the 1st. So his CD had to go out on by Saturday the 27th.
So they
Because
do
Saturdays
that
count.
weekends or not Sundays?
Not Sunday, just Saturday.
Not Sundays.
Right. And actually on Saturday, I had 2 go out. Our closers were working all day Saturday.
See, that's something good to know, Reid, because I wasn't aware that they counted Saturdays.
Yeah,
so
absolutely.
obviously not holidays too, right?
No, but I'll tell you what, Julianne, you hate it when you're having to get one out on a Saturday, but sometimes when it's just business is so busy, it has to happen. So
is there a reason why if it would take not the 3 days, so longer than, or is there anything that would happen as a result if the client didn't get it within the 3 days prior to closing?
Yes, the closing has to be moved, rescheduled.
Okay.
So, I mean, this is something once or twice a year, you'll see it happen. Somebody will drop a ball, or a closer will you know, something happens. Maybe they're planning to get it out late one evening and then one of the kids gets sick or something like that, but it doesn't happen very often. And we really monitor these dates very, very carefully. And our goal for months, we were getting them out 5 days before closing until the current flood of volume. And so now it's 3 days. So,
Wait, Reid, does that 3 days count the day of close, or it starts the day before, I guess?
Yeah, it has to be the last day of the 3 is the day before.
Okay, thank you.
Yeah, good question.
And the day that you send it out counts as day 1?
It does.
Okay, so Saturday, Monday, Tuesday. So Wednesday would be the earliest on a Saturday that you could, okay.
Yep. So looking over at the closing statement, what you'll notice is that his interest rate, we were able to get him locked a 1/4 point lower than my initial disclosures. Because the initial loan estimate was at 3.375 right here. And we got him to 3 1/4. And that's a function of watching the market. We've got a thing that we actually watch every day that shows us real time what's happening in the market. And there's plenty of times when I'll tell a client, don't lock today. Let's see what the market's going to do. So he locked at 3 1/8 on a 30-year fix with 3% down. His principal and interest payment is $1,433. And this is the statement that has, in my view, I don't know what's personal about this that the seller couldn't see, because the seller does not see this document. The seller can only see the Alta settlement statement, or they may do one of these with just his info, but not everything won't be there. They'll show the seller generally the Alta settlement statement, which is this document here that we'll go through in just a couple of minutes. So this one, it has virtually the same information. It looks familiar, doesn't it? That first page looks almost just like the loan estimate. We had estimated on this one that he was going to need $83.05, and it was $84.21. That's not bad. That's pretty good estimate.
Doesn't it have to be within a certain percentage point or percentage anymore, or is there a
That
requirement?
number doesn't. There's the individual fees do.
Okay.
For example, if you disclose a specific attorney and he is the attorney on the transaction, the fees have to match. And that's why a lot of companies will disclose a dummy attorney, because if I disclose Thomas and Brown and it was actually going to be Campbell and Brannon, then it's okay that the fees vary. But we try to disclose accurate fees, because it's kind of a challenge to me to compare that number to that number and see how close we got. And the clients seem to appreciate it too.
So Reid, the first document was an estimate before they locked in the rate, and then the next document was the actual locked in rate cost.
That's right.
Okay.
This is the actual numbers he's going to the closing table with, yes. Because this is the final closing disclosure that at this point has been collaborated with the attorney. That's a process that happens at the end also, is that we send our version of the closing disclosure over to the attorney's office, and then we have to go back and forth to make sure the prorations are right. Maybe the attorney got an HOA letter, right? That happens all the time. They get the HOA letter the day before closing, and there's something on there that nobody knew. It's not typically more than a couple $100, but that's kind of an unfortunate thing that the HOA letters come late in the game. So what he did, this client paid 3/8 of a point to get that lower interest rate. And there's the $1,295. There's the appraisal. He's already paid for that. Actually, he hasn't. We're collecting for the appraisal at closing. And then this is the attorney's fees section. This is all the other closing cost details. Here's your escrow section right here. This is the one part that you guys are a little bit probably paying attention to the commission section. Tell the truth. You know, you check to make sure that's right.
You better.
You better. And this is, okay, this was a preliminary closing disclosure, because what would normally happen is the last loan estimate numbers would go here, and then the final are here, and then it shows the comparison between the two. So this was a preliminary one. This was not the final. That was the first version before we finished all the collaborations.
What
Now,
is
this right?
the difference between the estimate and the final numbers, Reid? Could you tell us what that would be?
Say it again.
Sorry. Could you tell us what the difference between the estimate and the final would be, and why would there be a difference between estimate and final?
Well, when we, at the outset, we don't know what his actual homeowner's insurance premium is going to be. That's the biggest one right there.
Okay.
And I'll be honest with you that, you know, if they go with, there's a couple of companies who I won't mention, that they're almost always higher. And so if they go with one of those companies, or maybe they choose coverages, you know, extra coverages, they can have a premium that's $500, $600, $700 higher than what we would have estimated. The taxes, generally not, because we try to look the tax bill up. The only time coming late in the summer, we will have an issue where some counties, we go off the 2019 tax bill when we do the estimate, and then the 2020 assessment comes out. And if the assessment's out or the 2020 bill's out, we have to use that one. So, but that's something that's explicable. I mean, if a client knows we're estimating your taxes based on 2019, and all of a sudden the 2020 bill comes out, then that's, you know, there's nothing anybody can do about that. But those are the types of things. Lender fees aren't going to change. The only, in regard to the lender, the only thing that could change is maybe the client says, you know what, I'd like to pay a quarter point and buy my rate down. That would be their choice. But other than that, you know, like you could have, you know, HOA dues that, you know, we didn't know about because it wasn't in the contract. And that does happen sometimes, believe it or not. Not very often, but you get a community association disclosure that's not filled out properly. You could have it. Especially with initiation fees on a community association disclosure.
Initiation transfer.
Yep.
Hey, to that point, if your client, if you're representing the buyer and they're buying a home that has a homestead exemption or a senior discount, do you figure the taxes at a regular rate if we know that they're younger and not old, you know, in that senior citizen situation?
I sent out quotes this morning to a guy who's buying in the city of Marietta, and I pulled up the Cobb County tax bill. So what we do first, pull Cobb County. It'll show you if it's unincorporated Cobb or if there's a municipality. Like this one said on the bill, you know, here's the Cobb County taxes, and it said city of Marietta, but the tax bill was like $700. Well, immediately I know it's wrong. And then you go over and look at the detail. It says senior school tax exemption. So at that point, we have to estimate, and I tell the clients, in Cobb County, almost always 1% of the value of the home. That's the best estimate. And the attorney is going to do what's called a tax info sheet during the process, and they're going to go in and they'll calculate what they estimate the taxes are going to be, and that's the number we'll use. But we don't, yeah. I mean, if it's, you know, if my client's a senior citizen and the current owner is a senior citizen, then they can typically slip right into that exemption. But vice versa doesn't happen. So we pull the tax bills. What happens with us is, like when I get a contract this morning, I send it to Heather on my team. About an hour later, I'll get an email back from her. It'll have the tax bill attached. It'll have the attorney's fees attached, and it'll have the contract will be attached to it, and she'll say this loan's ready to disclose. And so she's already looked up the tax bill. And she'll tell me, hey, the tax bill's too low. I used 1%. If it's Fulton or DeKalb, you know, we'll go with 1.25%. Because I don't want that to surprise anybody at the end. So on this one, there's your seller contribution of $9,500, earnest money of $3,400, loan amount. This is the prorations that are coming from the seller. So the seller is responsible for these taxes because they own the house for 6 months. So they're contributing from their side over to the buyer side these amounts of money because the house was theirs then. My buyer shouldn't have to pay taxes for January through June, right? So that's what this number is. That's why we estimate 5 months when we send the initial disclosure, because we know that there's going to be a credit coming from the seller. And all it nets out to here. But again, you guys typically will not see that. I can run over this. Julianne, I don't know how much you want to go into those back pages.
Is it that important for us to know?
It's not. Matter of fact, I have never even had a client ask about it.
Yeah. So we can ask our buyer when they receive it to send it over to us so we can take a look at it, just so in case we miss something.
You can. But this is the bad boy y'all are going to see.
And as we're going through it, will you make sure that you highlight for us, Reid, here are the ones that we need to check to make sure that they're correct? Because I see mistakes all the time on settlement statements.
Yeah, absolutely. Well, first thing you want to do is make sure it's got the right property address. So, and make sure that all that's correct, that the parties are correct. They could have sent you the wrong one. Very easily could happen. And as you see, this is kind of the format that the old HUD-1 settlement statement had to a degree. Both people's info was on one sheet, and all the names of the fees and everything were here, and then it'll sum up over at the bottom. So this is the buyer side, this is the seller side. So this is where the seller's taking money from the seller and bringing it over to the buyer. The things that you would want to check, obviously, you're going to make sure that the purchase price is correct, because, believe it or not, there may have been an amendment to the sales price that we never saw. I had one about 2 weeks ago where the night before closing, the realtor said, "Oh my gosh, it looks like you guys didn't get this amendment." And there was an amendment to the sale price that we didn't have it. So we had to, we got it done and it closed on time and all that stuff. But you would want to check that. There's your earnest money from your client. That's how much they're borrowing. Some of this stuff, you'll know the deposit and the seller contributions. You may not know the loan amount.
So can I go back to that comment for a second, Reid? So based on what you just said, the CD has to go out to the buyer. What would constitute a change that could affect the CD, that could affect the closing?
Okay. See, she already knows the answer to this question. That's why she asked it. So if the APR changes more than 1/8 to the bad, that would be something that by law we would have to redisclose and start the 3-day count over. But I can tell you guys that is I've never had that happen. I mean, there would have to be something. I don't even know what could cause that to happen, because if it was our fault, we would eat it anyway, right? I mean, if there was something that caused the APR to change, we would take care of it anyway. So, but I think that's what Julianne's referring to. And here's the thing about this, guys. When this first came out, it was called TRID. There was 2 laws that used to govern this. There was Truth in Lending Act, and there was RESPA. And so TRID meant, and Truth in Lending Act, the acronym was TILA. So it was TILA, RESPA, Integrated Disclosures. That's what TRID was. And when it came out, we were a bit freaked out. Everybody was a bit freaked out, weren't we, Julianne? Because it was like, it was new. We didn't know. But I'll tell you, I think it's been good. Because now for a client to get their numbers 3 days prior to closing, and if there's something if there's an error, or if they needed to change something, we've got time so that when they go to the closing table, they're seeing numbers that are exactly the way they're supposed to be. And back in the day, I never saw it because we didn't do it. But I mean, I heard stories of people getting to the closing table and the numbers were entirely different, interest rate different, everything different than what they thought they were getting. And at that point, what are they going to do? Right? I mean, your stuff's in the moving van. So I think it was a good law. And then here in the middle section, this is the closing costs, and these are going to look familiar because they came from that last closing disclosure. This is your escrow section. There's your prepaid interest. There's your taxes. And see, if you notice this client's first payment is going to be due in September. Well, that Cobb County tax bill has got to be paid October 1, right? So we're collecting city and county taxes for the whole year because we're going to have to pay that bill. But if you remember, back up here, you got a credit from the seller for the portion of the year that they own the house. So they offset each other and they come out to about 5-6 months, something like that. Does that make sense?
Yep.
Okay. Attorney's fees are all in here. In this case, Thomas and Brown's charging the seller $50 probably to wire their money. The seller is paying the commissions. And this is a number that you would want to look at. And then here's the recording fees. And these are broken out: transfer tax and Gwinnett and intangibles tax. So that's actually Gwinnett County, not Cobb. And those numbers are the numbers that were aggregated together on the other sheet that I showed you. And this is the payoff of the seller's current mortgage. And there's their net. They're netting $58,562. And our client is bringing $8,421 to closing. And there's his initiation fee and his homeowner's insurance for the first year. I think what I would suggest if you're new is, first of all, try to get a copy of the Alta settlement statement as early as possible. And I'll tell you this, they should be able to prepare if you got the buyer side, they should be able to prepare, ahead of time. Either one of them, but the sooner you can get it, and then deep breath and just go over it line by line, because it actually does make sense. It's a little daunting when you first look at it, but it does make sense. And then have somebody that you can call and say, hey, can you review this with me? Or, hey, I'm seeing this on a settlement statement. Do you know what that might be? I mean, I think Julianne, Authorine, other agents in the office will be glad to help you. We would. I mean, as a loan officer, I'd be happy to help you look over it. But all those numbers should flow together from the LE over to the CD. And then they should be reflected the same way on the Alta settlement statement.
So some things that I see that I check besides the sales price is closing costs, seller paid closing costs,
Yeah.
HOA fees on the seller side and the buyer side to make sure those are right. I check for where would personal property be here? Can you show them where it would be if there was?
Like if they were buying something?
Yeah, exactly.
That would be down toward the bottom, because you really want to keep it out of the real estate portion of the contract. It would be down. It would be at the end. It wouldn't show up on the CD or the LE. It would only show up on this, and it would be down toward the bottom.
Right. And then of course your commissions. Those are the main things that can throw it off or be incorrect, especially any last minute negotiations.
So, and I think this is probably a question for Julianne. Do you typically ask if you're representing the buyer, do you typically ask the buyer for a copy of the CD to review with them, or do you just wait for the Alta statement?
I do. I say, hey, as soon as you get the CD if you don't mind, send it over to me so I can look over it, and then we'll both look at it and make sure that everything's right.
Okay.
And I've never had anybody not do it because they want me to look at it and make sure it's right.
Right.
Thank you.
I mean, if the client emails me and says, "Hey, Reid, you have my permission to share my closing disclosure," I mean, I will, but I'm gonna have to have permission. Anything else, guys?
Reid, I think I just want to make a quick comment if there's any
Okay.
like newer agents out there that like throughout the process of the entire transaction is to copy your lenders on all of, the contracts, like through due diligence. You could do a price reduction, and all of those things that change the numbers quite a bit.
Oh yeah. I mean, I've got agents that'll send me over things parts of the contract that don't have anything to do with the loan. I'm like, go ahead, send them to me, because I would rather you send me everything, even if I don't need it, rather than miss something that I do. I agree.
Right. Oh, I do have one question. I'm sure, I know you check credit at the beginning when they do their loan process. When do you guys check all that at the very end? Like, that you want to make sure that they still qualify for everything? How close to closing?
Yeah, it's within the last 5 days. We have the QC process. Not every loan will actually have a last minute credit re-verification, but if they
Gotcha.
do, it's within the last 5 days. I mean, sometimes, it can be right the day before. But it is something to remind your clients, don't go out and do anything that would have any effect on your credit. Don't buy anything new, that type thing. So not every file it's a soft credit pull to see if anything's changed.
And a reminder to them it's not just about buying stuff. It's also about changing your credit at all. Like getting a new credit card can totally throw you off.
Totally can. And we have to explain inquiries. Let's say you had 3 new inquiries. I mean, we'll send a letter over saying, hey, can you explain this inquiry? What did it result in new credit? And I mean, my worst story I ever heard, thank God it wasn't me, was a guy pulling up in the parking lot of the attorney's office and walked in and shook hands with his loan officer, said, "Man, check out my new truck and my new boat." He went, "No, you didn't." He did.
What about like something that wouldn't affect their credit score but might affect their bank statement, like spending a couple $100 in cash on something?
Generally speaking, you're not going to see that that's not going to be a problem. The only thing that we are looking at on bank statements is large non-payroll deposits, and that the client has to explain that.
Okay.
And typically by late in the game, I mean, I guess you could have a client who maybe you're waiting on one more bank statement, and let's say it's a week before closing, and he sends in his last bank statement, and on that bank statement, he has just enough money, but there's 3 big deposits, and all of a sudden you have to source them. I mean, it can happen. There is stuff that a client can do that the lender and the loan officer don't. I mean, the real estate agent and the loan officer, there's nothing they can do about it. It happened, and we have to deal with it as it comes. But thankfully, those are not real frequent.
All right. So what other questions do you have while you have our lender extraordinaire on the line? Now is your chance to ask about settlement statements or mortgages in loans in general.
Everybody is schooled. They're good.
So I have a question.
Okay, Stetson. And Stetson's a brand new agent. He just joined us a couple weeks ago. Go ahead, Stetson.
Okay, so what do we do in a situation where we have a buyer who's ready to work with us, but they're having issues with getting pre-qualified because of, say, a low credit score? Can that be offset in any way, or do they just have to raise their score?
Well, I think that's a challenge, especially for somebody that's just become a realtor, because client is like a gold coin. I mean, that's what we've been trying to get. I've got a client. Woo! Well, are they really a client? And maybe they're not a client yet. So that's where I think, Stetson, you would probably want to try to be see if they would be pretty candid with you and find out. I don't.
I think we lost Reid.
Yeah, I think we lost him. We'll see if he comes back on. But to your point, Stetson, a good lender is going to give them some suggestions on how to get the credit score up and what they can do, because people will do the wrong things.
Oh,
There
you
he
are.
is. You got frozen, Reid.
I know. I don't know what happened.
Go ahead.
Oh, I think I hear somebody upstairs must be messing with the router. No, I mean, I think, Stetson, you don't want to get too deep into the lender side, but I think, to find out in general what's going on, and then get him to a lender who can kind of come back and tell you, hey, Stetson, super nice guy, but it's going to be a while before he can do anything. And, we're not going to give you all the gory details, but the sad thing is a lot of times people that have got real significant credit issues and we tell them what to do, they don't do it. And that's the frustrating part, because most people, there is a way forward. It's just sometimes going to take a long time. But there's the question you said, is there anything that can be done to offset a really low credit score? There's really not, if it's low enough. If they're below a 600, there's nothing we can do for them right now. I mean, before COVID, we could go down to a 580, but 600 is the lowest credit score we can deal with now. But we will try to help them and give them some counsel as to, what they can do.
And quite honestly, if they're that low, chances are of them having enough down payment or all the funds that they need is probably minimal too.
There's usually more than one issue if the credit score is that low.
How quickly can you pre-qualify someone?
We try to do it within a couple of hours. I mean, right now, it might take, but we'll have it done that day. Unless the only thing that can change that is, like, sometimes you'll get a self-employed borrower who's got a really complicated tax situation. It might take a little longer to digest their tax returns. I've got one lady right now that she's sending me parts of her tax return. And every time I get one part, I'm realizing, oh, she didn't send me that part. So, but in general, you're talking about the same day and hopefully within a couple of hours.
Okay.
There's 3 of us that are taking our loan applications. So, we try to stay on top of it.
All right, did we get all your questions answered? Now you all are experts at settlement statement, or you will be, because now you know what to look for, and that's the most important thing.
That's right.
When you see all the numbers, it is a little freaky, and you just got to remember what side you're on first. Are you on the left side or the right side of the page? Because I've done that before. When you get really used to working with buyers and then suddenly you've got a listing, I freaked out when I looked at the numbers, and then I realized, oh my God, I'm looking at the wrong side of the page. So,
yeah.
It's okay, but give yourself some time to look over it and feel comfortable with it. And that way, if you've coached your client, then when you get to the closing table, it makes it so much faster and easier because they've already seen the numbers and they're comfortable with them. So it just makes it go that much faster.
Yeah, Julie, if I can say something, and this doesn't really specifically have to do with the lending thing, but just a general encouragement to the younger realtors. Exuding confidence to your client is a really important thing. And if you don't know enough to be confident, then learn, because you want to be at a place where you can confidently lead your client. You can actually serve them. There's a lot of times where real estate agents are more, the client is following. I mean, the client's leading and the realtor's following. And that's not a good place to be. And I know there's some personality types that are going to be difficult, but if you guys can gain enough confidence so when that you know that you're actually informing and leading and taking your client from point A to point B, your transactions are going to be so much better. That's one thing that I see is where a problem is when a realtor is uncertain and isn't strong enough to tell the client what they really need to hear. I don't know if Julianne would agree with that or not, but I see it as
100%, Reid. They will feed off of your confidence.
Yes.
And they're less trouble if you are confident. If you have any hesitation at all, they will take over, and then it becomes just this nightmare.
Yep.
All right, ladies and gentlemen, we are coming up on the top of the hour. If there are no more questions, then I want to just thank Reid again for his time and effort. Thank you so much for answering our questions. And if you have any questions offsite, like you think about afterwards, I'm sure that Reid will be glad to field those questions if you just email him. What's your email address, Reid?
ReidClark@silvertonmortgage.com.
Easy peasy. Awesome.
Yep. Thank y'all. You're a blessing. I appreciate you.
Thank you
Thank
so much,
you.
everybody.
Thanks, Reid.
You're welcome.
Bye.
See ya. Bye-bye.